So, good afternoon. Thanks, Am Kainth, for joining me this afternoon. Am is a full-time property investor who I met a number of years ago at my Wandsworth property meet. And huge thanks for joining me, Am. So, your background's in marketing. You were educated in Scotland at University of Stirling. And just to say huge thanks for joining me this afternoon.
Pleasure. Happy to be here, Brendan. Thank you for inviting me. As you say, we've known each other for a while now and regularly attend your networking events, which I find very useful.
Thank you. So the focus of this particular interview is on Brexit and the impact. And your recent background is moving into the development field, particularly in southwest London in Clapham. And also you've looked at, you've also invested in other areas as well, a little bit more central, i.e. Kensington as well. So do you want to give the listeners a bit of a flavour of the areas you look at and also who you're looking to connect with post this interview?
Yeah, absolutely. Thank you. So in terms of what we do on the development side of our business, we focus primarily on residential developments, which we look to buy, develop and sell. And as you said, we don't just focus in Clapham, but we focus on all west and southwest London postcodes. That's not to say that we exclude other areas, but what we do as part of our research is that we look at areas where we know there is a defined exit. So for the product that we are bringing to market, we will look at the average household income in that area to ensure that the buyers for our properties are able to get mortgages that are sufficient enough to buy our product. I guess part of that comes from my marketing background, which is trying to meet consumer needs and wants. And, you know, whilst I'm not an analytical junkie, I do like to use data at the core of what we do. So it's quite important to ensure that what we're building, A, is right for the local market, but B, people can afford to buy it, because one of the key things for us in our residential developments is the speed at which we exit. So we focus on existing buildings primarily. We do look at planning and land opportunities also, but the key focus is existing assets that we can fund with our senior financiers or through our privately crowd-funded partners. And we are looking for planning gain, we are looking for freehold to leasehold splits, and also we're looking for commercial to residential conversion opportunities across London, primarily between zones 2 to 4, but we will look further afield as long as there's very strong transport links.
Sure. And in terms of Brexit, because June the 23rd, June the 24th has been unexpected for some, but the key thing is how do you move forward and what impact and what have you noticed with regard to the recent events with Brexit. So in terms of what you've noticed about your strategies, have you changed strategies in terms of what you're looking at, but maybe you're looking at more smaller projects, or has it changed anything for you?
Yeah, I think it has changed a number of things. I've listened to a number of your interviews with some of the other people that you've invited along, and I think, you know, I see us as running a property business, and like any other business, you have to move with the market and be responsive to trends in the marketplace, and property is no different. So, you know, yes, Brexit was unexpected, and it has brought certain challenges because, you know, we've been able to see very, very quickly there's been a tightening of certain lenders and, you know, their view of the market. Now, some of that was already underway with the changes to the stress tests that mortgage lenders were applying to investors, to the rate margins that they were introducing. So there was a political shift that was already underway. But I think Brexit, on top of all of that, culminating with the taxation changes on residential income from buy-to-let properties, has all had a very, very severe short-term impact on the market. From our point of view, I guess it's no different to what we were doing in the last recession. We are still actively looking at opportunities, but now I think the market has moved from a seller's market to a buyer's market. And that's not a bad thing. I think property prices were over inflated. So we needed to see a slight correction, and I think we're seeing that correction. One of the challenges, I think, is that as banks and other funding partners perhaps tighten their grip on lending terms and their, I guess, confidence in the property sector, it means that loan to values might be revised. And, for us, we're engaging more actively with some of our private crowdfunding partners, because there's a bigger opportunity for joint venture partners and private crowdfunding partners to work with us. In terms of the last few weeks, we've been very active on a number of viewings. We've offered on a number of different projects, including commercial office buildings with potential for conversion to residential under PD. There's been an offer on a residential development of 11 apartments that we've put in for quite recently. We're looking at some commercial premises in southwest London, which will be a mixed-use building, which will remain commercial for the immediate future. And we'll look at a longer-term planning gain. So, we're active, and
that's interesting. In terms of the trend of office to resi, some people say it's actually going to be office to office, possibly changing the format of the office. But it's interesting. You've mentioned that you've got one recent office acquisition, and you're
Yeah, I mean, just to sort of recap, I mean, historically we have focused on office to office conversions, where we buy tired buildings, refurbish them, and rent them out as more modern, what we call concept living type of workspaces. There's a shift in the way that people work and live these days, and in the office buildings that we've acquired over the last 5 years, 6 years, we haven't followed the sort of route of converting office buildings to resi. We've steered away from that. We tend not to follow the crowd, but try and do something a little bit different. So we were buying office buildings and converting them into higher quality office buildings, maybe dividing the space up into smaller, more affordable units, so that we weren't reliant on single or a handful of tenants. We now spread our risk, if you like, and we get a higher uplift and a higher yield. So that's what we've historically done, and we're still looking at on the investment side of our business. We are looking to acquire more office buildings and keep them as office buildings. On the development side, we focus on pure residential. So we'll look at office buildings where we acquire to convert and sell. There has been a big shift in the office space and commercial market as well. So as I mentioned, we have put on offers on a commercial unit that will keep us commercial short term, just because of the location and the yield that it will bring. But we look at each opportunity and we assess the merits of each opportunity and look at a number of exits rather than having one defined exit. We like to keep our options open, as they say.
Sure. In terms of after this interview, if someone wants to get hold of you, What would be the best way? Would it be via email or through phone call or?
Yeah, they can email me and directly, or they can jump onto LinkedIn. Luckily, there's very few Am Kainths around. So if anybody wants to go onto LinkedIn, my details are on LinkedIn, and my name is spelled Am, A-M, and the surname is Kainth, K-A-I-N-T-H. Or if somebody wants to call me directly to discuss more about what we do, they can contact me directly. Are you happy, Brendan, for me to give out my phone number?
Yeah,
Or
of
would
course.
you?
Yeah.
They can call me directly on 07956 448 365, and we can meet up and have a coffee. And we meet with lots of investors, developers, finance companies. I'm constantly networking, as you know, Brendan, and I'm a big advocate of your own networking events. And it keeps us in touch with what's happening in the market, but also introduces us to working together with other investors and other developers as well.
Sure. Just going back towards the Brexit. So we've covered about the change in strategies. In terms of what do you think the biggest risk to the property industry is over the next couple of years? Doesn't have to be Brexit, can be a little bit more open than that. But what do you think the biggest risk is? And of course, where there's risk, there's opportunity as well.
Yeah, I think on the development side, where we're looking to sell on residential apartments and houses, I think the biggest risk is one, availability of finance for both us as developers and for the buyers as end users. And secondly, a potential adjustment in pricing. Now, from our point of view, that's not so much of an issue because we factor that into our new offers or our acquisition contribution analysis that we put together on any deal. But nobody can look into a crystal ball. We look at a lot of market intelligence and insight. But at the moment, there's this unknown really with Brexit. I think Brexit has made a lot of developers either rethink their strategy or to reevaluate the impact of potential funding, because we know all too well what happened in the last recession. So I think it's just taking a more balanced view of the market